The U.S. job market continues to chug ahead without signs of overheating. A good sign for workers and the U.S. economy, according to economists. While the market has cooled from its breakneck pace of the Great Resignation era, employers are adding ample jobs to their payrolls. Unemployment hovers near historical lows, and worker buying power, so-called real wage growth, is steadily rising, economists said. The labor market has been resilient despite economic headwinds like higher interest rates. This is still a labor market that's very attractive, especially historically speaking, for workers, said Julia Pollak, chief economist at ZipRecruiter. There's still strong, broad-based job growth and real wage growth has been restored, Pollak said. I think that's very, very good news. Employers added 303,000 jobs to payrolls in March, the U.S. Bureau of Labor Statistics reported Friday. That's the largest monthly gain since January 2023. Job growth in the first 3 months of 2024 to 274,000, on average, beats the 2019 pre-pandemic average by more than 100,000. The U.S. unemployment rate declined to 3.8% in March, from 3.9% in February. Unemployment has been below 4%, a historically low mark, for more than 2 years. That's an exceptionally long period of such tight labor markets, Pollak said. Those conditions are pushing employers to make very attractive offers to new hires and proactively recruit prospective candidates, she said. The layoff rate has also been near a historic low for more than 2 years, as employers hang on to their current workforce. Additionally, more workers joined the labor force in March, boosting the labor force participation rate at a time when job openings remain historically high. That dynamic suggests a healthy, sustainable equilibrium between the supply and demand of labor, economists said. The labor market is settling into a sweet spot, said Nick Bunker, economic research director for North America at JobSite Indeed. It's powering ahead and there's open road ahead of it as well, he said. Of course, the job market isn't as hot as it was in 2021 and 2022, after the U.S. economy awoke from a COVID-induced slumber. At that time, workers were quitting their jobs at the fastest rate in history, a trend dubbed the Great Resignation, amid ample job opportunity and the relative ease of finding a higher-paying gig. Workers saw the red carpet rolled out for them, Pollak said. More from personal finance. Immigration is taking pressure off job market and economy. How to spot and overcome ghost jobs. Workers are sour on the job market, but it may not be warranted. But those conditions helped stoke high inflation, which touched a 4-decade high in 2022. Fast rising prices for consumer goods meant workers' rapidly growing wages couldn't keep pace with price tags at the store. The average worker's buying power fell for 2 years as a result. Wage growth has declined to an annual 4.